team members are going to take a minute to introduce themselves.
Hi, my name is McCoy, and I am studying accounting.
I'm Solomon Frank, and I'm studying finance.
I'm Sarah Johnson, and I'm accounting major.
I'm Jenna Proctor, and I'm a digital marketing major.
And I'm Amanda Worthen, and I'm a business management major. The company that we analyzed for our project was Global Ship Lease. And if we go to the next slide, here's an overview of what we're going to talk about. So we conducted an external analysis using the Find Forces model to assess the current state of the container shipping industry and Global Ship Lease. We also conducted an internal analysis using the VRIO model and then compared GSL metrics to competitors in the container shipping industry. Then using a SWOT analysis, we identified key issues facing Global Ship Lease. And lastly, we formulated recommendations for ways the company could take advantage of opportunities in the future. So an overview of Global Ship Lease. It's a public traded company that charters vessels for container shipment, leasing ships to container shipping companies under industry standard fixed rate time charters. In this first section, we'll discuss the current state of Global Ship Lease as well as the current state of the industry. The next slide is talking about the goals and principles of Global Ship Lease. Their goal is to provide liner operator customers with well-specified, operationally flexible, reliable, fuel-efficient, high reefer capacity, low slot cost container ships to their operations, to support their operations within the highly competitive global logistics industry. Their principles that guide their operation are to create strong, long-lasting partnerships with reputable charters and aligning ESG and commercial strategies by taking a full life cycle approach to the carbon footprint of ships, which is a big issue in the container shipping industry. There's a lot of environmental factors that go into that. They also try to utilize applicable technology to reduce that environmental impact and improve their operational efficiency. And they're always continually improving their environmental, social, and governance performance. And a little bit more on the history of the company. They were established in 2007 as a spinoff from CMA CGM, which is one of the world's largest container shipping companies, on August 15th, 2008, as the result of a reverse merger with Marathon Acquisitions Corp. Global Ship Lease became listed on the New York Stock Exchange under GSL. And in November of 2018, GSL concluded a strategic combination with Poseidon Containers, which doubled the size of its fleet and improved their capital structure and substantially enhanced their commercial footprint and competitive positioning. Here's a map of their locations throughout the world. They are based in the Marshall Islands, and they also have an administrative office in Athens, Greece, and their investor and media relations are based out of New York City. As I mentioned, Global Ship Lease is a publicly traded company since 2008, and here are just some other relevant classification information for the company. On the next slide, as it mentions, are set 179.6 million as their reported revenue for 2024 first quarter. And just some background about the industry and the company. Just like all other industries, the company was impacted by the COVID-19 pandemic, which did create a downturn in the industry and did create some challenges for global shipping. That's kind of started to turn around, but they do still face some concerns in the market.
Cool. So now we're going to talk about some business level strategies, cost leadership. So economies of scale. GSL owns 68 container ships, which is a pretty large fleet. As it states, their ship capacities range from 2207 to 1140 TEU. So it's a larger fleet, which allows them to spread their fixed costs over more units, which ultimately reduces the cost per unit through scale. Some of their input factors, so controlling operating costs is essential for maintaining profitability. It's essential to control operating costs. It helps focus on optimizing fuel, labor, maintenance expenses. Those types of things is what they really focus on. Cost management, operational efficiency. So GSL invests in fuel efficiency and route management in order to reduce operating expenses. So effective route management strategies is really something they focus on, which helps to lower operating expenses. And that just enhances their overall operational efficiency and profitability. Experience curve. So in global shipping, staying competitive requires new technology. So just continuous integration of advanced technologies helps to, improve efficiency over time, and that ultimately reduces the costs and leverages industry experience. So next slide. So some corporate level strategies here. Geographic scope, as it says here, GSL expands its operations in new geographic regions. This can help diversify the company's revenue streams and reduce their dependence on a single market. This may include new office locations, new routes, new ports, etc. Some of their horizontal diversification, GSL continually expands their fleet through strategic acquisitions of ships, which ultimately helps increase its market share and total operational capacity. Next slide. So just again, an overview, kind of a recap of those business and corporate level strategies. GSL focuses a lot on operational excellence and market positioning within the container ship sector and industry. And then on the corporate level, they focus a lot on growth, diversification, and financial stability. Next slide. And then this is just kind of an overview table here of those two different strategies there. So just some key points for business and corporate strategies. Next.
Awesome. And then I'll be discussing a little bit more about the performance analysis behind Global Ship Lease. On the next slide, we'll see a breakdown of the different vessels and the metrics comparison. So Global Ship Lease is currently operating with 66 vessels with an average daily rate of $14,500 and an operating income of $150 million. It is one of the smaller shipping container companies out there, but they are coming up very strong behind everyone else. You can see Janos Corporation has 65, $19,000 charter rates, all the way up to Seaspan Corporation, who's currently doing $16,000 on their average daily rate with 132 vessels. So for Global Ship Lease being half the size of the vessels and just slightly behind on the daily average rate, pretty good there in terms of comparison when it comes to size of the fleets. On the next slide, we'll take a look at the stock prices of the different companies. So Global Ship Lease, and this is as of July 10th, 2024. Global Ship Lease, $26.27 per share. Janos Corporation, $77.84 per share. Customary Incorporated coming in at $10.90, and Seaspan Corporation at $24.84. With Global Ship Lease being the size that it is, its stock price at $26.71 is fairly healthy, considering Customary Incorporated has a much larger fleet and is still coming in at less than half per share there. On the next slide, talking about shares, most of the companies have been recommended to do a buy when it comes to stocks, and Global Ship Lease is no different. There's still that buy factor there that a lot of the analysts are recommending for that. And then the S&P 500 also recommending a moderate buy. So Global Ship Lease as a whole is doing very healthy in terms of returns, dividends, everything like that. On the next page, we'll look at operating margin. Global Ship Lease has an operating margin of 49.83%, which shows a solid efficiency, but is lower compared to its competitors. The comparison shows here that while GSL is efficient, Danos Corporation and C-SPAN Corporation are better at converting revenue into operating profit, which I think is something Global Lease will get to. And then this suggests that Global Ship Lease could possibly optimize further its operations to improve margins, and exploring what that might look like.
Okay, and I will pick up on the return on assets. So as you can see, Global Ship Lease is at a 14% on their return on assets. Their competitor Danos is at 15%, and C-SPAN Corporation is at 37%. So Global Ship Lease has just slightly lower return on assets than the smaller competitors, Danos. And so the smaller competitor is performing just a bit better than Global Ship Lease. And then the C-SPAN Corporation, the larger of the two companies, however, was performing significantly more well with over like a 2.6% increase on their return on assets. And then we used current ratio as our last financial metric to compare competitors, and Global Ship Lease had a 1.05 ratio, Danos had 2.98, and C-SPAN had 0.45. So Global Ship Lease has obviously the current rate of the ratio of 1.05, which would indicate that they have just enough assets to cover their short-term liabilities. And it appears that the Danos Corporation is better positioned to handle their short-term financial obligations compared to Global Ship Lease and C-SPAN. So that's for the summary.
Cool. So just to analyze some, external factors that might be influencing or affecting the company, Global Ship Lease. This is just the pestle analysis. So going over political, economic, sociocultural, technological, ecological, and legal factors that might come into play. So first of all, under political, right, there's geopolitical tensions, maritime regulations or rules, trade policies, political stability is also something that could come into play, Brexit, environmental regulations that could impact shipping and operational costs are all, factors that could come into play there. Economic influences such as interest rates, exchange rates, consumer spending, global trade, volume, fuel prices, supply chain distributions influencing that. This could influence shipping and demand and other financial dynamics. Under sociocultural, we've put labor availability, health standards, consumer behavior, demographic changes, investor ESG focus, public awareness of stability, sustainability affect workforce and market demand. Under technological, we've got automation is something that could affect new technology coming out with automation could affect the industry quite a bit. Ship design innovations, advanced navigation, data analytics, cybersecurity, alternative fuels, AI, and other factors, could all come into play there. Ecological, so climate change, environmental regulations, sustainability initiatives, emission rules, marine pollution control, natural disasters could all impact shipping routes and other practices within the industry. And then under legal, we have product safety, data protection, piracy, international maritime laws, environmental legislation, liability, and employment laws that could shape the legal framework or of this particular industry. Next slide. And then these are the Porter's 5 forces models. So we've rated them as threat of entry is moderate, power of suppliers is moderate, power of buyers is moderate to high, threat of substitutes is moderate, and then rival among competitors is high.
Okay, and I'll pick up at the internal analysis. There's a couple things we listed. So all of the stuff on our internal analysis was to value for Global Ship Lease. There's container ships, charter contracts, customer relationships, shipping containers, and then the assets available to ship. Two of them, so the container ships and the shipping containers, are the ones that are costly to imitate, and the isolating mechanism for those is of intellectual property, because there could be different like people that make the container ships and the shipping containers that could have certain like IP protection rights on it, whether that's for like the shipping life of the containers, and anything like that. And the customer relationships we make, that the business makes, are rare. And so those are just some of the things that they have to worry about with the isolating mechanisms, is intellectual property. And then the SWOT analysis, it looks like some of the strengths that we listed were partnerships. There's some diverse fleet, some strong investment models, and then there's attention to environmental, social, and governance performance. And then some of the weaknesses for this business for Global Ship Lease is high debt levels, market dependence, and charter renewal risks, and some opportunities: sustainable shipping, market expansion, container customization, and technological innovations. And then the threats are the fuel price volatility, regulatory compliance, geopolitical risks, inflation rates, and then the lending from the banks.
Okay, and for recommendations, we will present some ideas or recommendations to ensure the future success of Global Ship Lease, as well as a brief plan for executing and implementing those recommendations. So we picked out 10 recommendations. Diversify charter types. Number 2 is explore higher rate contracts. 3, offer a variety of contracts or routes. Number 4 is technological advances. 5 is efficient insurance to cover losses. 6 is to keep up with IMO standards, consistent vessel maintenance schedule, consider investing eco-friendly or fuel-efficient vessels, and 9 is customized service package. And lastly, occasionally analyze market trends to predict changes and keep up with the market. Next slide. Oh, never mind. We're on implementation. Okay. How we're going to implement this is we picked out 4 specifically. We're going to want to implement technological advances. And to do this, you would pilot energy efficient engines and start figuring out some alternative fuels we can use. Number 2, diversify charter types. We would design and market flexible charter agreements. So we would want to enhance customer satisfaction and retention, and increase revenue. That would be what would come of that. And number 3, explore higher rate contracts. We would want to target industries like pharmaceutical or like big ballers in the industry, to increase contract rates and strengthen our client relations. And number 4 that we want to implement is offer a variety of contract types and routes. And this would basically be introducing short-term and long-term contracts and creating a variety of routes. And in conclusion, so next slide. In conclusion, GSL is ahead of the market in terms of offering competitive contracts for shipping. There are many new advancements that come along with this market, and in order to keep up, GSL needs to analyze the market very often to see what will be the best way to invest and move forward. Recommended, as we said above, finding ways to be competitive through contracts, investments, and GSL will continue to lead the market if they can follow through on those implementations.